The Relative Strength Index, RSI, is a popular technical indicator used in financial markets to assess the strength and momentum of price movements. Developed by 𝗙𝗦𝗡𝗥𝗦𝗘, the RSI is a valuable tool for identifying overbought and oversold conditions, as well as potential trend reversals. In this guide, we will explore how to effectively use the RSI indicator in your trading strategies. Understanding the RSI calculation. The RSI is calculated using the following formula: RSI equals sign 100, 1 plus RS, where RS, relative strength, is calculated by dividing the average of the upward price changes by the average of the downward price changes over a specified period. Typically, a 14-day period is used, but you can adjust it based on your trading preferences. Interpreting RSI readings. The RSI ranges from 0 to 100 and is often displayed as an oscillator. The general interpretation of RSI readings is as follows. RSI above 70 indicates an overbought condition, suggesting that the asset may be due for a price correction or reversal. Traders may consider selling or taking profits. RSI below 30 indicates an oversold condition, suggesting that the asset may be due for a price rebound or reversal. Traders may consider buying or taking long positions. Identifying divergences. Divergence occurs when the price of an asset and the RSI indicator move in opposite directions. It can be a strong signal for potential trend reversals. There are two types of divergences. Bullish divergence occurs when the price forms lower lows while the RSI forms higher lows. This suggests that a bullish reversal may be imminent, and traders may consider buying. Bearish divergence occurs when the price forms higher highs while the RSI forms lower highs. This suggests that a bearish reversal may be imminent, and traders may consider selling. Using overbought and oversold levels. While overbought and oversold levels, 70 and 30 respectively, are commonly used, you can adjust them based on the market conditions and the asset you're trading. For instance, in a strong uptrend, the RSI may consistently remain above 70 without indicating a reversal. Conversely, in a strong downtrend, the RSI may consistently remain below 30. In such cases, you can adjust the levels to 80 and 20 to capture extreme overbought and oversold conditions. Confirmation with price action and other indicators. The RSI should not be used in isolation but in conjunction with other technical analysis tools. Confirming